Welcome back. So we've talked about how to use our API endpoints to get the list of tickers for which we have predictions for, to get predictions for common stocks and even for market parameter predictions. But maybe it is the case that you don't want to write the code, but still want to get access to the predictions and maybe do the analysis yourself in an Excel file or a different tool that you're using on a daily basis. To be able to do that, you can use our dashboard solution as well. And in this episode, I'm going to explain how to use a dashboard with all functionalities in it. Let's get into it. So we are in the dashboard right now. So we have two tabs here, as you see, one for the market level predictions and the other one for the common stocks. Market level predictions are sort of easier to understand, so I'm going to dive into the common stock predictions right away. So in this particular case here, you can write the ticker or name of the company that you're interested in. It's always better to explain things through an example, so I'm going to go through an example as well in this case. One of the most popular companies lately is NVIDIA. You can write the ticker of the company, NVDA, or alternatively, you can also write the name of the company. Then it still pops up in the search result. If you click on that one, then you get the predictions in a chart on the dashboard itself. I'm going to clean up the graph to start with so that we get a better idea about what's going to be happening in this graph, because there are a lot of tools and we use that you can use to get the predictions in the way you're interested in. If I clean up everything, we obviously see an empty chart here, but there's one dotted green line and another dotted red line here. And these are, in this particular case, are thresholds for bullish and bearish signals. Under normal conditions, if the prediction itself is above 50%, let's say, for NVIDIA at some point in time for the upcoming 10 business days, the price increase prediction happens to be 60%. Since 60% is higher than 50%, that is assumed to be a bullish signal from our algorithms. And you should still, always remember that these predictions are only indicative and generated algorithmically, and there's no guarantee that those predictions will be holding all the time, and which you will also see in this particular video as well. So I'm going to be showing everything as much as I can. So the 60% prediction is assumed to be a bullish one because it is, above 50%. But another prediction, let's say on another day, maybe is 80%, which is also a bullish signal. The thing is that, 80% bullish signal, the prediction itself, is a much stronger prediction compared to another prediction that is only 60% or maybe, 55%. So maybe on the chart itself, you want to set some thresholds to be able to view the prediction performance based on the thresholds that you set. By default, these predictions are 51% and 49%, but you can change these thresholds. The way to do that is that there's a threshold button here, as you see, and here you see custom 51% and 49%. These are the default selections. But if you click on that button here, a small window pops up where you can change these signal thresholds as you want. It doesn't mean that a difference between them has to be identical. Maybe you can say, okay, my bullish threshold is going to be 60% and my bearish signal or threshold is going to be 40%. So 10% above and below the 50% midpoint. But you can also say that my bullish threshold is going to be 75% and my bearish threshold is going to be 40%. Bearish one is 10% below the 50% midpoint, but maybe the bullish signal threshold is going to be 25% higher than 50%. You can set them however you want here. Bearish one is 49 right now. For bullish one, it is 51. Maybe you want to use some predefined thresholds. If you just say, if you click on the conservative one here, the bearish threshold happens, 20%. Now we are very conservative in our selections, because if we want to say that a certain prediction is a bearish one, it really needs to be very, very low. It needs to be below 20%. Or if a signal is going to be, used or perceived as a bullish one, in our strategy, let's say, our threshold maybe is 80%. So what's going to happen for the predictions that are above 20% and below 80%? We are going to ignore them. So that's the simple answer. Alternatively, you can go for the balanced one, and balanced one gives you a narrower band actually between the bearish threshold and the bullish one, which are 30% and 70%. If you want to go for the aggressive one, which is going to produce a lot of signals, actually buy and sell signals, for example, then maybe it can be 45% and 55%. If we click on the reset button here, then we go back to the default values again. I'm going to go for the default values for the time being to be able to show as many examples as possible. So there are a lot of legend buttons here. So one is the price prediction itself and the price prediction 5 days moving average. the reference price and the moving average of reference price, short-term moving average of reference price, which is 5 days moving average. Obviously, as you know, predictions are made available on each market day before markets open, roughly a few hours before markets open. So for each market day, we actually publish a new prediction for each common stock from US stock markets. And the prediction interval for these predictions are 10 market days, excluding weekends, excluding the days when the markets are closed. Now, when we make predictions, or when algorithms make predictions, those predictions are made for the upcoming 10 market days in our system, as it is today. We are looking at the last 30 predictions right now because it is the one that is set here, but alternatively you can pick the start date and end date. I'm going to customly find the time interval for the predictions. But for the simplicity, I'm going to go for the last n predictions, and in this case we are seeing here the predictions for the last 30 business days, excluding weekends and market holidays and stuff. So I'm going to click on this one here, and the blue line here is showing the prediction trend for the last 30 market days. So as you see here, in the beginning, the prediction starts as a bearish one, then it goes further down and up again, up again, up again, and it goes down. As you see, as I hover my mouse pointer over the chart, then I start seeing, either green or red boxes. And each box here, as we see, is actually representing the success of the prediction itself. So if the prediction itself is a bullish one, then the expectation for the 10 coming business days, or let's say at the end of the next 10 business days, let's say, since the prediction itself is bullish, then we expect that the price will be increasing. If that really happens to be the case, then this box here gets the color green. Similarly, if the prediction itself is a bullish one, and if the price of the stock goes down during that time interval, and at the end of these 10 market days, if the price has really gone down compared to the reference price for which we published the prediction, that prediction is assumed to be a successful one, and this box here gets the green color as well. So the box here, as it moves to the right and left, it gets the green color if the prediction is a successful one, but if the prediction fails, then this box here gets the red color, as you see here in this particular case. For example, the prediction itself, just as an example, 53.6%, which is a bullish one, but not very strong actually. And the reference price for this prediction was $178, meaning the price of the stock is expected to increase during the next 10 market days with regards to this reference price. And the prediction confidence in this case is 53.6%. And 5 days volatility by the time when this prediction is generated was 3.05%, which gives an idea about how the stock price has been trending in the last 5 days. So but what happened at the end of these 10 market days, even if the prediction was a bullish one, despite that it's a weak bullish one, but let's say it is still a bullish one, the price of the stock didn't really go up. It actually went down, and you can see it on the left bottom of the chart. The price change was minus 6.16% with regards to the reference price that we published. One thing that is important is that these predictions are published before markets open. So for the prediction itself, we also publish this reference price. For the sake of example, in this case, the reference price is $178. The prediction is a bullish one, but we publish this prediction before markets open. By the time the markets open, we don't really know yet what's going to be the opening price. Maybe it is the case that the price of the stock started from a much lower price. Maybe the opening price was, let's say, I don't know, $170. It went down by $8 already from the start, which sort of complicates the things actually, but this is something that you should be aware of. If you are developing your own strategies and algorithms by using these predictions, combining with other tools probably, you should consider this aspect. Each time you check the prediction itself, you should be checking the reference price as well. Similarly, let's say that the reference price, for the sake of example, don't look at the chart right now, the prediction itself is a bullish one, and the reference price is $100 for the sake of example. So the market's open, and all of a sudden the stock is maybe, I don't know, $115, so 15% up all of a sudden. So if the price has already gone up that much from the start, maybe you should be ignoring that prediction because the prediction is already successful, even if the prediction may fail during the next 10 business days. It is still possible. As a matter of fact, in this chart in particular, we are coloring these boxes as you see here, either to green or red, depending on the price of the stock 10 days later. But maybe it may be the case that the price of the stock goes up or down during those 10 business days. It's not like from the reference price itself 10 days later, it is not one jump only. The price of the stock is changing all the time. And to be able to cope with this problem, you should also be following the predictions on each market day. Maybe the prediction is today, let's say 65%. 65% is a bullish one, so that the algorithms are expecting the price of the stock to increase during the next 10 business days. Tomorrow it is maybe 58%, let's say. It is still a bullish one, but slightly weaker. And the day after, maybe the prediction happens to be 35% all of a sudden. So it may be the case that during those 2 days, the price of the stock increased a lot and things have changed. The input parameters have changed for the stock. And for the next 10 business days from the point when the prediction is published, we are all of a sudden expecting a price decrease. So it is crucial and very important to follow these predictions and prediction trends all the time. It's not like you take one prediction only and it is the valid one for the next 10 business days. You shouldn't be thinking like that. So what we see here, as mentioned, the prediction line, for each day we have a separate prediction, but it's not only about that. We only have the option to add the reference price to this chart. So for example, here in this case, the prediction itself, the very first prediction in the chart, the prediction was 45.4%. 45.4% is a bearish one. And with regard to which price, the price was $182. It means that we are expecting a price decrease in the next 10 business days from this reference price starting from today. Since 10 days later, the price was lower, so that the price actually went down by 2.24%. So this prediction was a successful one. If I move further, let's say, for example, at this point in time, my signal becomes a bullish one, a weak one, 52.8%. So we are expecting a price increase, but the price still decreased by 0.16%. And it failed, then it is successful again because we have a bearish signal and the price really decreased 10 days later, and green. So the period was quite successful in this case during the rest of the time. So the point here is that with the help of these red and green colored boxes, you'll be able to focus on the prediction interval itself so that you can analyze visually how the prediction is trending versus how the price of the stock has been changing, at least the reference price that we are taking in this case. And it is also possible, as you may remember, that we can add the moving average of the prediction itself and also the moving average of reference price. Just for a second, if I just remove the predictions and reference prices, and if I just look at the reference price, the moving averages of predictions versus the reference prices, maybe you get a sort of better picture. It's not that volatile anymore. It sort of gives a sort of better view of how things are changing. So I'm going to go back and I will just look at the actual values instead of looking at the moving averages. But I'm going to change my thresholds. Let's say I'm going to go for the balanced option here, 30% versus 70%. For a signal to be perceived as bearish, it needs to be at most 30% or smaller than that. And for a signal to be a bullish one, it needs to be at least 70% or bigger than that. And I click on the save button here, and all of a sudden I am in a different world. Now, as you can see here, the dotted red line and the dotted green lines here, they've been moved away from each other. Before, they were sort of right in the middle, just above and below the 50% line. As you see, for example, I am hovering my mouse pointer over the chart again, and the box itself is neither red or green anymore. It gets the gray color, which means that we are not able to say if the prediction was a successful one or a failed one, because we are not really classifying the signal as a bullish one or bearish one, because it is sort of in the middle. It doesn't really meet our criteria anymore, because the prediction was 45.4%. and it is not smaller than 30%, or it is not bigger than 70%. So it is gray, 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 and now red, because the prediction reaches to 70.1%. The price increase likelihood is 70%, so it is a strong bullish prediction. But as you see here, the prediction failed because at the end of these 10 market days, the price of the stock has actually gone down by 2.77% with regards to the reference price that we had for our prediction. But the thing you can see here in this red box, let's focus on that one. The prediction was 70% by the time we made this prediction with regards to the reference price, which is $176. If you follow the red line here, which is showing the price trend of the stock as well, the price actually increased, started increasing starting from the third day and fourth day and fifth day and even sixth day and seventh day. During those days, the price of the stock was visibly higher than the reference price itself. And also, if you keep focusing on this red box, you will see that the blue line is going down each day. On that day, we had a prediction which was a bullish one with regards to a reference price that we published. During the next 5, 6, maybe 7 days, the price kept increasing with regards to that reference price in general, not in the first 2 days actually, but starting from the third day. So the price was higher than the reference price itself. But at the same time, as the price gone up actually during this time period, we were also seeing that the prediction was going down each day, indicating that, okay, this prediction is actually turning into a bearish one. It is not that strong bullish anymore. From that angle, after 6, 7 days, if you quit your position, maybe this prediction is still a successful one. But if you just compare this with regards to the price of the stock 10 days later, then the prediction is not successful. I hope I am able to explain things as intuitively as possible. So you can keep analyzing, and we are getting into a gray field again, meaning that the prediction is either neither bullish or bearish. Let's see. Okay, now we find another one. As an example here, the prediction is 21.4%, as you can see at the bottom of the chart. 21.4% is a very strong bearish signal. And the reference price at this point in time, $180. And 10 days later, the price actually went down by 1.67%. But if you look at the red line here, close to the end of these 10 market days, the price actually went up in the last 1, 2, 3 market days actually, but before that the price was going down very significantly. And at the same time, you can observe that the predictions were increasing. At this time, when the prediction was published, in this case it was 21.4%, but the next day the prediction was 67.1%, because we had a very steep price decrease there. But based on our thresholds right now, it is neither bullish or bearish. So depending on how the predictions are changing, it is very important to be proactive and taking dynamic decisions in terms of when to get into a position or quitting a position, so to say. And again, you can check the last 10 market days or maybe 90 days, and you can still do the same analysis as you hover your mouse pointer over the chart itself. If you are very much interested in the details, you maybe want to download everything, all the data from here. You can just click on the Export CSV button here, which makes it possible to see all the predictions, reference prices, volatility figures, and everything in one single CSV file, which you can use to do further analysis by yourself. So apart from the API endpoints, it is possible to use the dashboard as well. Just by coming here, you can write the name or ticker of any company from US markets. So you're going to get the predictions on the chart on the dashboard at sharepredictions.com. I hope this video was useful for you to understand how predictions are working, and the design principle for market level predictions is the same as well. So if you understand how predictions are working here for common stocks, it is the same process for market level predictions as well. And both for common stocks and market level predictions, it is possible to download the predictions in a CSV file just by clicking on the Export CSV button here. That's it. That was the dashboard at sharepredictions.com. If you have an active account at sharepredictions.com and have already access to the API predictions, you also get access to the web dashboard as well. Thanks for listening, and see you next time.